Hello, this is Matt on the Moon Lambo channel. I believe that XRP, in terms of price action, will crush its previous all-time high of nearly $4. And as far as the all-time high, it depends on the source you go to as far as what the specifics are, because different entities pull data, public data from exchanges differently, but CoinMarketCap says the all-time high for XRP is $3.84, and Live CoinWatch, for example, says it's either, I forget, $3.91 or $3.92. It's one of those anyway. But you get the cut of my jib. It's a lot more, the all-time high, than the price of XRP today. And for a number of reasons, I am beyond confident that we will see that again, and that we will ultimately enter price discovery, and who knows where it'll take off from there. Now, I want to be clear that I do not have a financial background. I am not offering financial advice, and you absolutely should not buy or sell anything because of anything I say or write. I'm just sharing with you my everyday Joe Schmo opinion on this stuff because it's fun to talk about, it's fun to engage with my fellow XRP community members, and make YouTube videos. So that is all that it is. Want to be super duper crystal clear up front so nobody thinks I'm someone or something that I'm not. But I mentioned in a video yesterday something that I don't feel like I've ever, not that I can recall anyway, I don't feel I've ever sufficiently fleshed out, but this is super important. If you want to know one of the most important things just to be aware of in terms of maximizing your profit as an XRP holder, this is going to be it. And again, I don't say that as I'm offering advice, it's just my opinion, so again, don't buy or sell, but I'm happy to share that opinion with you, and I think it is of crucial importance, and I think a ton of people are going to mess this up. Just a ton of people, and then they're going to have lifelong regret, probably. So there we go. Anyway, before we go any further, though, if you would please ever so delicately tap that like button, I would definitely appreciate the support, because if you do, it will tell the YouTube algorithm that you don't completely hate this particular Moon Lambo content, and then it will push this tripe onto other unsuspecting victims. And also, I recommend that you treat yourself, girl, by subscribing to the Moon Lambo channel, which is the best channel on all of the YouTubes. Now, mind you, at the time of recording, XRP is at 23.8 cents. Bitcoin's at $10,712. Market cap for the asset class, $339 billion. Bitcoin dominance at 58.34%. And I would, like I mentioned yesterday, I would love to look back on this, these numbers at like 5 years from now, a decade from now, and just be like, oh yes, the good old days when everybody was bitching about how XRP wasn't moving around in terms of price action. Like some people, they just want to like poke with a stick and be like, come on, do something, like do a trick, do a backflip or something. Come on, XRP, just do anything, right? Now, I'm not like that. And this is going to be a perfect segue into what I want to talk about in terms of what I think is going to be one of the biggest mistakes that a ton of people are going to make. And it comes down to with some concepts I've certainly mentioned with a certain amount of regularity on the channel having to do with timing the market. I mentioned that somewhat frequently. But I want to explain in greater detail just how damaging that is, because that I don't think I've ever done here. Here's a website called thesimpledollar.com. This was written September 1st of this year, 2020, and it's titled, Why Mistiming the Market Can Be Disastrous. Now, I learned about this concept long ago, way back. I mean, I don't know if I was like in my late teens or early 20s. It wasn't taught in school, but I ended up learning it. I don't remember where or how, but it never left me. It's the idea that people, when they're investing in the stock market, and again, this absolutely applies to crypto and XRP, when people buy into the stock market, they emotionally buy and sell. Again, same for crypto. It's just, it's sped up here because cycles for crypto over the last decade have been at blazing fast speeds for a lot of reasons, including there's not that many participants in the market, and then when people flow in, it accelerates everything. There's a lot of reasons, which I'm not going to delve into any more than that in this video. I don't intend to anyway. But what people do is they will emotionally buy and sell, and without data, you're not going to know just how terrible that is as a move. And that's why, like, for me, if you're not a day trader, this is just my opinion, if you're not a day trader, and some day traders make money, a vast majority will lose a fortune, like something like 85-90%. There's data on that too, so that's why I'm not interested in even trying my hand at that. It's like I legitimately no interest. But as far as holding long term, that's what it takes. If you want to make money in the stock market, that's what it takes. If you want to make money in crypto, that's what it takes. like strong hands. That purely that's it, right? And again, I understand that it's kind of scary, especially in crypto, because there's over 7,000 cryptocurrencies, and I suspect that the vast majority are not going to be here for the long haul. But I'm also noticing that people to this point are not sufficiently parsing out the differences between cryptocurrencies. So I personally am not really that scared. But if you're the type that gets shaken out of markets, let me illustrate to you just how much you're shooting yourself in the foot, and why, in my opinion, it does not make sense for people to do this. Just my humble opinion here. You do what you want, not offering advice, but I think this is worth knowing. Do your own research, though. But take a look at this. Advocates of buy and hold stock investing make a strong case as to why it can be disastrous for a novice investor to try to time the stock market. Yeah, that's why I always say I have no interest whatsoever in timing stock markets. And even when I started investing years ago, I was like, oh, this will probably be like a decade-long investment minimum for me, is what I was thinking, right? Or maybe I told myself technically 5 to 10 years, but, we had just gone through, I didn't know we were just about to go through that crazy parabolic cycle. When I joined the world of crypto, which basically meant after that, of course, you're going to go through a bear market, and then maybe it's better to reset from there, your timeline, right? But anyway, the piece continues. It's been shown that frequent trading generates higher fees, and that emotional trading leads to buy high, sell low behavior. How about that? And they're talking about stocks here. Does this sound familiar to anybody listening that might hold crypto and XRP? Sure sounds very familiar to me. Also, every time you trade an individual stock, you're betting that you know more than the Wall Street experts and their high-frequency trading algorithm. And so you could compare that to who we have today. There are plenty of institutional investors in crypto, but obviously, admittedly, not nearly as many as in traditional asset classes. But you can look at Pantera Capital. You can look at your Grayscale. And there are public pension funds that have literally invested in actual cryptocurrencies, not just companies that are supporting blockchain, but actual cryptocurrencies. And you might think, well, why did they do that? Was it on a whim? No. These people are well versed, and maybe they're right, maybe they're wrong. It doesn't mean they're right about everything, but my gosh, do you think that it's more likely they're right or the emotional retail investor? I'm going to go, if I had to flip a coin here, I don't even have to flip a coin. If I had to bet, I would bet with the institutional side of this just about any time. Without knowing any other factors, if I just had to pick based on that, I would say no to the emotional investor here. Right, and you can think about it. You can think about like Grayscale that recently doubled their XRP holdings. You can think about Dan Moorhead, who runs Pantera Capital, who said that he thinks, and it was a quote, he cited 2 cryptocurrencies, and in one sentence he said, cryptocurrencies like Bitcoin and XRP are likely to do well. And he was talking about that in the context of the debasement of the United States dollar, inflation is coming, and then the fact that Bitcoin and XRP are scarce assets, right? That's what he meant. So that's what they're saying, and volatility in the short term, frankly, doesn't matter here. And so the piece continues. Those are good reasons, and they make a strong case for adopting a simple investing strategy focused on index funds that you can stick with through good times and bad. But it wasn't until recently that I learned of another compelling reason to believe in the buy and hold strategy. And please, guys, stick with me because I'm about to get to the meat of this. And it gets really interesting. Please listen up because it really illustrates just how bad of an idea it is to not hold for the long haul, make emotional decisions, get impatient, all that, just how bad all of that is. And they write, but it wasn't until recently that I had learned of another compelling reason to believe in the buy and hold strategy. There have historically been only a handful of great days for the stock market every year. And if you miss even a handful of them because you're trying to time the market, you will dramatically lower the overall return of your investments. Oh, and that is so true. Wait till you see the numbers. It gets bad. The stock market can be a wild ride. Swings of 30% in value during short but volatile periods are not uncommon. They're uncommon compared to crypto. But anyway, when times get rocky, there can be daily percentage changes of 15% or more in either direction. So what would happen if you tried to time the market and ended up missing out on the days with the biggest positive changes? Which, by the way, is what people are doing with cryptocurrency. It is what people are doing with XRP specifically, and they are missing it. And I've highlighted examples of December 2017, days before the meteoric rise of 20-something cents to almost $4 $4 in a matter of weeks. People post. There's one guy in the video. I'll never forget this guy. Don't know who he is, but he had a YouTube channel. Don't know if he still does. And he was talking about XRP. He was impatient. It wasn't doing anything. He missed an opportunity for gains. He could have invested in other cryptos throughout the course of 2017. And he's like, yeah, I just sold all my XRP. That's it. I am done with it. And then what happened? I'm not kidding you. I'm never going to forget this. It was a matter of days later, and XRP just took off, and I was like, ooh, that's gotta hurt. I was aware of this concept before I jumped into crypto, but let's illustrate this, just how bad it is. And I'd illustrate this specifically with cryptocurrencies if I had the data, but I'm not aware of any entity that has put it together, but I do have the data for the stock market, and it's the same humans with the same DNA behaving exactly the same, and so this absolutely applies. And so here's what Fidelity found when they crunched the numbers on what would happen to a hypothetical $10,000 investment into an S&P 500 index fund from 1980 to 2018 if you missed the best 5 market days. Think about this. 365 days in a year, right? And you're talking about over the span of this, 38 years. So whatever 38 times 365 is, that's how many days. And we're talking about, if you miss the 5 best days, how bad is it for you? And this is why it's horrendous to try and time markets. And that's why I just want exposure to XRP. I don't care about the volatility in the meantime. That's just my humble opinion. That's how I stand. And so if you were invested during that time period, 1980 to 2018, if you were invested for all of those days, your $10,000 investment over those 38 years would have been worth $708,000, $143,000. Numbers are hard, guys. Let me try that again. Your $10,000 investment after 38 years would be worth $708,143. There you go. So a little over $708,000. That's if you didn't get shaken out of the markets, you didn't try and time the markets, you were just disciplined for 38 years, which apparently humans can't frickin' do because they're too impatient. And emotions, it's not moving on my timeline, so I'm going to sell. Yeah, that's what people are doing. It's dim-witted, all right? Those are not good. If you want to get in and out, you do you. I'm not offering, again, not telling you to buy or sell. It's just, in my humble opinion, those are horrendous reasons to buy or sell. They're not logical, and it's like I don't know if I need to question intelligence here, or if it really probably is more so just emotions at play. It probably doesn't have as much to do with intelligence. I think the emotion just gets the better of people, and that's unfortunate. So what if you missed the best 5 days, though? Instead of earning roughly $708,000 over that time period, you would have earned only $458,000. Hey, still a great increase. Your $10,000 turned into $458,000, but you missed over $200,000 of additional profit because you tried to time the market during those 5 best days. 5 days out of 38 years, and you just lost over $200,000. Okay, what if you missed the 10 best days? It gets even worse. Instead of earning the $708,000 if you didn't try and time the markets and emotion didn't get to you, instead of the $708,000, you missed the 10 best days out of 38 years. 10 days in 38 years, you earn only $341,000. Do you see what I'm getting? Do you understand this is the same with crypto? You try and time XRP's market cycle because you're impatient and you won't have it. It should have happened by now. Okay, bye, Felicia, because you're going to have a bad time. That's what I believe. This is my opinion. And then what if you miss what if you miss the 30 best days over the 38-year period? Instead of earning $708,000, if you miss those 30 best days, you'd earn only $135,000. That's substantial. It's only 30 days out of 38 years, and it's already down that far. What if you miss the 50 best days? Instead of earning $708,000, you earn $62,000, $62,342. Do you get the point? I hope I am hammering this home sufficiently. This is worth being aware of. And do your own research on this. Seriously. This is just one source that I pulled. I pulled up several sources before choosing this one because I thought for illustrative purposes it was the best. There's a chart on your screen. You can look at it if you care to. They're very easy to see. And so I see humans behaving like this in the stock market. I see humans behaving like this in crypto. And it's not going to do them well. That's why for me, I will outpatient anyone else. And damn it, I freaking mean that. I am going to outpatient anyone else. And I will not start selling until the XRP is worth substantially more. And that doesn't mean that I'm going to try and time the cycle, the high for any given market cycle. I'm just saying that it's in particular in the short term, because I am going to want to reduce risk, and that's fine too. I'm just saying, like, maybe you don't want to hold for 38 years. I'm just trying to get a concept across. For me, I am going to be reducing my risk during the next parabolic move up to some degree. I'm never going to sell my XRP, but I'm willing to do that. And even if it's true that I'd be better holding for 40 years, it's another thing that I am factoring in, and this is fair too, is just how much risk I'm willing to have in that particular XRP basket. Because if it's worth substantially more, at some point I got to kind of balance my overall portfolio anyway. And that's where I'm coming from, and that I can live with. What I can't live with is if I just see volatility in the markets, it scares me, and then I get out. Like, that's what I'm talking about, really, and that I will not be doing at all. So it's worth knowing, because again, I just see it rampant. I see it in the comment section. There's a guy, I'll just leave him unnamed. In one of my videos yesterday, he's like, "Yeah, XRP just hasn't been doing anything, so I just sold, and I'm just going to be a troll now." And I was just laughing at him. I was like, "You poor pathetic thing." I was like, "You have no idea what the hell you're talking about. It's not remotely intelligent, and it's completely emotional, and it's silly, and it's childish." And so that's why I thought, you know what, let's get this out. I've been mentioning this from time to time. Let's really break this down so people can see just how damaging it is when you get impatient, because it's not happening on your timeline. It's not okay with you. It's got to go now. Okay, little princess, like, chill out. That's not how markets work. It doesn't happen at the snap of your finger. It'll come when it comes, and that's okay. That's why, to me, it just makes all the sense in the world to just be a little bit patient, and you're just getting rewarded to not do anything. You're getting rewarded literally to not do anything. Other than you put the money and you took the risk, fine, but you don't have to do anything. You don't have to build an XRP ecosystem if you don't want to. You just have to hold it. That's it. Oh my gosh, you're not even Ripple. You don't have to do all the hard work they're doing. You know what I'm talking about? So that's just my perspective. So now, again, of course, if you're not comfortable being in the market, well, just get out. Do what you want to do, whatever you think is right. I'm just illustrating that timing the markets is one of the most horrible things you can do when it comes to investing. Not having a long-term mindset, it's just destructive. But I'll leave it there. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.